All right, so today I'm going to be talking about my red trade on Euro CHF. So let's break it down. Let's get into it. As always, we're going to start from our higher time frame, work our way down. So let's start on the daily chart first. All right, so daily chart. So at the current moment, what are we operating within? I want you to answer among yourselves. What is this operating within? A bullish market structure or a bearish market structure? Bullish market structure, right? See how we had this shift in market structure right here? See this high? If you look at my cursor, look at where my cursor is moving. This push up, this leg up right here broke that high. That represents a shift in market structure. That was a shift in market structure. Now, is it ready for us to trade with that shift in market structure? Is it ready now? Is it a setup on the daily, or is the daily primed and ready to go? No, we want a swing low level put in now. All right, so that's next. After you get your shift in market structure, after it breaks that swing high level, we want to preferably see a pullback into a discount. Sometimes it won't. Sometimes it'll just, because like if something is like really strong, if the trend is like really explosive, really strong, it has a lot of upwards momentum going towards it, sometimes you won't get that pullback into a discount on the daily. And that's fine. Like the pullback into a discount on the daily chart is not 100%. I don't 100% need it. 4 hour, I want it. The 4 hour, I want it. But sometimes on the daily, again, like I just said, if the upwards momentum is a little bit too explosive, a little bit too strong, sometimes it's just not going to give that pullback into a discount. Now this thing, daily chart, as you can see, the price action is really not that pretty. It's been kind of chopping around in here, as you can see. If you look at a little bit of a, if you zoom out on your chart a little bit here, you can see it's kind of a messy chart. It's not that clean really, but we did have a shift here. We did have a pullback into a discount. What do I mean when I say discount? Because some of you might be scratching your head and you're like, okay, whoa, hold on, Mike, this is all going over my head. What do you mean by discount? What do you mean by that? Well, I have videos on it. I have videos on my YouTube. You can check them out. Just search premium and discount. But in short, if we take our Fibonacci from this low to this, to that low to that high, you can see we pull back below 50% equilibrium on that price range, right? See that? That means we pull back into a discount market within that price range. That's what I mean when I say discount. So we broke that swing, check. And it was a nice break in structure too. We've recently been talking on the YouTube about stop runs, shifts in market structures, high probability shift. This left a fair value gap, as you can see that, and it completely rebalanced that fair value gap as well. And it was a strong close above the level. So, I mean, it's a decent shift. It's a decent shift in market structure, pull back into a discount, and we got our swing low level put in. So you can see how we got our lowest low in the middle. Look at my cursor, look at where it's moving. That's your lowest low in the middle, and then you have a higher low on the left and a higher low on the right. Shift in market structure, swing, pulls back into discount, puts in swing low, bullish market structure, just like that. It's that easy, it's that clean, right? So that's what I need, or that's what I needed on the daily chart. I had it. So that ensures that I'm trading with the daily market structure, that I'm trading with the daily trend. So just like that, guys, I'm trading with the higher time frame trend. I got the higher time frame trend backing me. It's in my favor. So now we're going to go to the 4 hour chart, because this is where we had our higher time frame level. So right here, we have a 4 hour bullish order block. See this? I'm going to mark the body of this 4 hour bullish order block right there. See that? See that down close candle right there? That is your bullish order block. Now, it's not the best order block. I want to make that clear. And why do I say that? Why do I say it's not the best order block? Well, there wasn't a major liquidity grab for one. That's best. There wasn't a major liquidity grab. But also, we didn't have that fair value gap either. Well, let me see. Nope, we didn't have it. I thought that might. So we didn't have any fair value gap either. So like, it's not a major liquidity grab. There's not the bullish fair value gap in there. It's not the best order block. Okay, it's still a order block. It's still a higher time frame level, but it's not the best. All right, it's clearly not the best. All right. So that was our higher. So far, what have we concluded? Well, we're trading with the higher time frame trend, the higher time frame market structure. We have a higher time frame level still, being that 4 hour bullish order block. Now, this is one of those cases where I already got the confirmation beforehand. So what do I mean by that? Because if you've watched a lot of my videos, what we like to see, and it's still ideal, I still like to see that reaction off a level. And if you waited for it, I mean, you would have avoided an L on this play if you did wait for this. But what I mean is I already had that confirmation is the lower time frame trend was already bullish. So remember, I have a couple lower time frame charts. 1 hour and 15 minutes what I mainly use. Sometimes I'll pull up a 30-minute as well, but 1 hour and 15-minute are my main lower time frame charts. And if the pair that I'm trading is operating within a lower time frame market structure, like on those time frames, and we're coming down into a higher time frame level, then I want to see that shift in market structure. I want to see that confirmation. I want to see that fair value gap. But with this specific pair, it was already operating within a bullish market structure on the 1 hour chart, not the 15-minute, but the 1 hour chart. It was already operating within a bullish market structure, and we already had that fair value gap confirmation on the first move up right here. See this? And it gave me nice risk reward, which we'll go into here in a second. See that? We had that fair value gap confirmation right there, and then you see that horizontal blue line right below it, which indicates where that 4 hour bullish order block was at. So again, lower time frame 1 hour was already bullish. We had the higher time frame level that was enough for me to pull the trigger on the trade. Okay, and I prefer to see a reaction off that higher time frame level. So not just like on the first move up, but I like to see a pullback, react, shift in market structure. But again, 1 hour was already bullish and the risk reward was really nice. So I figured, hey, it's worth a trade. Now, where did I end up hitting this at? That's going to be the next question. Like, where exactly? So real quickly, I'm going to draw in some data dividers to clean this up a little bit. So in Discord this morning, what I said was, if you remember, if you're following along in Discord, my free Discord chat, there will be a link to that in the video description if any of you guys want to join it. So I post charts in there every single day, educational material, all that good stuff. So what I noted in Discord is, well, I posted this setup, I posted the chart, but I also said, I want to see this takeout low of day. So why would I say that? Why did I say I want to see this takeout low of day? Well, because that's a key liquidity pool. Okay. So I didn't see it like coming down into this fair value gap right here, filling it and just turn on the dime and taking a high of day. I knew likely that wasn't going to be the case. I knew likely it was going to want to reach for this next key liquidity pool, being London session lows, which is low of day. So we're coming into New York kill zone. That was the next key liquidity pool. So after we took out low of day, that's where I wanted to get in for a buy. So after we took out those sell stops, I got in. So as soon as it was flushing through low of day like this, I was buying it. I was all over it, right? Now, there was a few other things I didn't like about this play off the jump. Okay, so there's actually quite a few things that wasn't great about. It was still good enough for a play, still good enough for a setup, and it was 2-to-1 risk reward, which also helped as well. I like that, really good risk reward on the play, because I was targeting this high. See this? Why am I targeting this high? Because that is a key liquidity pool. That is buy stops above this level. Okay, there's buy side liquidity above that level. That's high of day. That's a key liquidity pool. Okay, and what was my stop? So my stop was at this low right here. Okay, and I want to keep my stop right here because that was where that key liquidity grab happened. See how it was kind of a wiki, which isn't ideal either. That's another one for the notes. I really don't like that. Whenever we have the liquidity grab is like really like shallow like that. It's really like really wiki like that. But that was the key liquidity grab. We grabbed these lows right here, and then that's when we had our ascent to the upside, right? So that's where I wanted to keep my stop, because at that point it's below the fair value gap and it's below the key liquidity grab. It's 2-to-1 risk reward. We have the higher time frame level. 1 hour is bullish, 50-minute is bearish, as you can see. But yeah, that was the reasoning behind this play. Now, what didn't I like about it? Well, I consider this relative equal lows. They're not exactly equal, but they are relative equal lows. And when you have relative equal lows, so you see this low right here, look at my cursor, look at where it's moving. You have that low, and then you have this low. Those are relative equal lows. That's not ideal. You really don't like seeing that. Okay, I really don't like seeing that. I did see it, but I still decided to pull the trigger on it. Again, because it's still a setup, it was a good risk reward. But that was one thing I didn't like about it. Another thing I didn't like about it was the fact that there was no institutional price level down here in this area, in our buying area, in a discount. See how there's like no institutional price level in here? It's like the 40 level, 35 level, 30 level. We had the 20 level, but it's all the way back down here at our stop out point, which is, looks like where it's starting to curl up right here as well. So there was no institutional price level in my zone where I was buying. So that was another thing I didn't like about it. So let's put it all together and let's really study this play. So what are some of the things that we didn't have on this? Let's go over it one more time. Well, 4-hour chart, we didn't have the reaction off the level on the pullback. That's something to note, okay? That's something to note, and that's something to note going forward. Okay, we had the confirmation again. Again, don't let it go over your head. The reason that I took it was because 1-hour market structure was still bullish, and we had this fair value gap in here. That's good enough for me to take a trade, but it did not have the reaction, which is ideal. I like to see it come down into a higher time frame level. Higher time frame level could be on that 4-hour or the daily. Test a higher time frame level, and then on the 1-hour or the 15-minute, we want to see a reaction. We didn't have that here. Okay, again, we grabbed it on the first pullback into the level. That's something worth noting. Number 2, and this is probably the biggest one, is the fact that relative equal lows. Okay, I hate relative equal lows whenever I'm buying, and I hate relative equal highs if I'm shorting. You don't want that. Okay, really clean level there. That's for sure a minus for the play. Number 3, there's no institutional price level. There's no institutional price level in our buying area. But I think that's about it. Those 3 things, or 3 things that we had going against us, and that's worth putting in the notes for future reference and comparing with data later on. Again, daily chart was good. We had everything on the daily that I wanted. So yeah, that was the play.